We got a fun Friday session ahead. We're going to be looking through several different charts, just taking a look at them, having a little bit of fun. Bitcoin here on the bid, 90,800 so far, trying to hold support here of this channel. But so let's take a look at it. We know that we have to make a meaningful repair above this line over here. Justin, I saw you saw MicroStrategy finally on the bid. That's nice to see. NVIDIA getting ready to pen long. We're short across the board here. Bitcoin. We're short Ethereum. We'll take a look at Ethereum's moving stop loss on the short side, the trailing stop loss. We're short Cardano, and that's okay. I'm happy that Bitcoin is potentially looking to put in a hold over here. MicroStrategy up 4%. I've been trying to find out what is the flaw, what is the risk of STRC. I've been asking everyone I know. Silver right now, oof. Would we exit? No, when they exit, they exit. Only when they exit. We follow our strategy completely. So let's take a look at what's going on over here. We have a lot to take a look at, and we're going to have a lot of fun doing it today, I hope. First of all, Bitcoin, we know we need a meaningful repair above the outside of this channel. Yes, we have the trend line break, and the trend line break is still absolutely valid unless we break down outside of the channel. Meaningful repair, but next repair is going to be somewhere around just above 94,000. This little bit of structure over here you could see, but first of all, let me zoom in so you could see. You can see the touches here, the two touches here, up a tiny bit right there, the last two touches. That's where we got to clear. If I take the same angle and put it over there, you can see, yeah, they match up perfectly. So 94,300 would be the next repair, next breakdown below this tag of support on structure. So that's coming in below 87,600. These are exact levels we're giving out over here. That's going to be the next repair. That would take us back in towards the resistance. A breakout above would be a meaningful repair. So Bitcoin number one. I want to work my way into getting for number two is NASDAQ here trying to hold a breakout after the what could be known as a liquidity grab. Breakdown, repair the next day back to neutral. Now breaking out to the upside over here. Intel's earnings yesterday were quite poor, as to be expected. Market's going to be focusing a lot more on things like NVIDIA than Intel's earnings. But next week we do have, right, the big one on Wednesday, Microsoft, Meta. Following day we get Apple, and then the following week we move towards Google and Amazon. There's the MicroStrategy fans over here. So nice to see the repair in place. I keep waiting for our lagging chart of monetary base total to update. It's lagging in the fact that it's updated a month later, and it is at the most predictive of risk that we have out there. So it's quite a bit of a conundrum. Balance sheet is rising. You all know the deal. And let me jump over and talk about our positioning right now. So right now, and I know that you're all interested in Ethereum, so we'll talk about Ethereum, but Bitcoin is holding to its current trade over here, not yet close to an exit. Its stop loss is at 4.5%, and its gain right now is 1.9%. Ethereum has a gain of 6% with a stop loss at 3.5%. Ethereum has, on an exit signal, it moves towards a trailing stop loss of 1.1%. That has not happened yet. When that happens, you will see over here the stop then say 1.1%, and it will then be trailing. And then you'll see the stop loss over here also move down. Right now, the stop loss is all the way up over here. So that has just not happened yet. And then Cardano is currently, with that wide stop loss as Cardano has, currently having a trade 1.7% against it. I have to stop over. A couple of things before we get into the fun part of today's session. So Bank of Japan, steady on hold, and kind of see that we have that mark in the sand over here at 160, holding so far coming into this area. So right, close below there, we got some room for the yen to fall. If that were to happen, you can see the dollar stalling out. No read over there. We have the 10-year, and we've had that sell impulse that's currently active right now. Buy impulse remains below here. We are on this mega coil. There's going to be a big move out of it. My gut says to the upside. If it's to the downside, it could be 20-year. Let's take a look at it. Look at the pressure is like moving upwards, right? You could see the difference between the 20-year and the 10-year, and that upward val of pressure. I wonder what that looks like over here. So let's just take a look at look at that upward movement. It's different. It's much more upward. Look at that. So this is this like the 20-year? Closer? That upward pressure. Let's look at the 40-year. Same thing. Not too much difference over there. Let's move back towards our 20-year. Take a look at it. So yeah, less. I mean, it's in Japan the yields were this is more flat, but you could see that lower, higher lows and basing out over here, right? It looks like it wants to be relieved to the upside. Now, you have to just draw a line and stay on the right side. The line I would draw is difficult. I don't know what I would draw. That's why I follow the 10-year, but this one for sure. And then as far as a buy impulse being put in, right? You can't, I mean, is that right? I don't know. Ace, we're about to get into. I would go like this. I play it a little safer. However, that's a double black diamond. This is a black diamond, and this is the conservative break out on the 20-year. And you will see. I mean, you can see even here less than the 20-year, and it's not flat, but this coil, the resolution ultimately is going to be a big deal, I think. Over here. Boom, 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 boom. Look at that. Wow. 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 I'm trying to see what this looks like up here. I'm just looking at, you can see the support, the resistance, peaked above it. Into the support right here, though. So, and that goes a little lower. You can see where it was playing, but that's structured throughout. Yeah, lots of activity taking place. Lots of activity afoot over here. And mostly on silver. I mean, 101 silver. I said that I thought maybe we were looking at this week what could be the top over here. And then since we've seen yields stabilizing in Japan. So that was erroneous, obviously, that particular theory. Gold now is just $15 off of 5,000 with silver above 100. We got some gold and silver charts to look at. And then we're going to start it off over here, though, with this particular chart. And we're just going to go in whatever order these are in, which is just random. This is a chart of by Simpson of Bitcoin, gold, power law. And you can see the model broke. Well, listen, just from my view, all right? I saw my friend Plan C saying, well, the model's not broken. And it looks like to me that the floor here, and it just looks like to me, all right, that it broke down from their Bitcoin gold power law model. And which is interesting. It's really interesting, right? There's lots of talk, and there's continue to be talks, right, about not time yet to short silver, but that time might be lining up, and people watching for it. And listen, I think that in the future it's going to be substantially higher. And I imagine that if there were any type of violent correction on gold and silver, if it corrects, 10-15% on a slam down wick, I personally think that's an accumulation spot. Right now, these things are running, and I expect that there will be at some point some type of violence, but that violence right now is to the upside. And I personally am not trying to, on a short time horizon, get rid of these things. I imagine the devaluation of the currency continues and or accelerates. And we'll revisit this, or we'll continue to visit it throughout. So to me, this looks like this model broke. Not that the model broke. Like, the model is saying something different is happening. We try to, or we mostly, I would say, measure Bitcoin to the dollar. The reserve currency, the underlying fiat, and a lot of people do that in whichever region of the world. And then if you live in Japan, you measure it to the yen. If you live in Europe, you're measuring it to the euro, etc., etc. And so with this occurring over here, it reminds me of this chart over here. By the way, this is gold versus the US dollar, and this is just the structure that we've had in place for quite a while. And you can see the last two touches over here. You can see the touch over here, and the breakout, and it's broken out through the upper resistance. And usually when something like that happens, that means we are going to see, or usually what we see is some type of accelerated move and then a mean reversion. And the accelerating move is for sure underway right now. But this is what it reminds me of. I'm going to go backwards in gold's history. And gold is one of the assets that had multiple. This was the structure coming out of the massive bull run that started in 2003. And then you see that this is the structure throughout. Not just like pretend these lines aren't here. We're focusing up over here. And then eventually it breaks down right over here. And this is the same thing on Microsoft, right? So we'll look at Microsoft in 1 second. But when it broke down, that doesn't mean that at this point, like, gold is the bullish case for gold is done. What we've always viewed it as is that usually sets up a sideways accumulation zone, assuming that, of course, in Microsoft's case, assuming that it's going to be able to find a new, let's say, ultimate market opportunity, which it did with the cloud, Azure. In gold's case, right, was treasuries and fiat going to replace gold? No, but this was shortly after the birth of QE and Operation Twist and QE 1, 2, 3, and then we were looking at a decade of strong devaluation and growth. And at that point, it made more sense to be invested in the things that were going to outperform. And gold wasn't it at that point. But look what happens. Gold goes into this massive 50% correction, goes into this massive accumulation, and then it finds a new structure. And then gold has since continued within that new structure and popping up now towards the top. Microsoft did something very similar. So here's Microsoft. Softy. Here's Microsoft. Oh, I don't know why I was thinking MicroStrategy now. Look at Microsoft. 1, 2, 3, 4 touches into there, right? Imagine a breakout, but jump back over me and with me and look at this particular moment ever since, Microsoft is launched, and then, boom, boom, Windows 95, and then ultimately here in the dot-com bubble, it goes into a correction and then ultimately breaks structure. That structure, I want to see where it comes down from, right over here from the launch, right? And then holds and then ultimately breaks, and then it goes sideways with a substantial correction. And this is ultimately, just like gold, an accumulation. And the structure looks very similar with the reverse Wyckoff accumulation and as well as the spring. It's very similar to what you saw on gold's, which, if this happens with Bitcoin and gold, which it looks like it is, keep in mind for when that occurs, right? And then finally here, MicroStrategy finds its new structure and moves on. I wonder what this old structure looks like in there. I can't see these. Here we go. Hold on 1 second. Hold on. Hold on. Wait a minute. I feel like we need some music in the background for the Fun Friday sesh. All right. I just want to see what that old structure looks like over here. And look at that. So, I mean, it's kind of undeniable. I mean, it is very undeniable, right? Interesting. Interesting. Fascinating. Fascinating to me. Oh, hold on. I don't want to lose that. There you go. Dip below that, which means that we're making a leg down. But that's kind of neat. I'm going to just keep it there and get off it because I have to look through it. It's kind of neat. I remember Windows 95. I remember the blue screen of death. Ah, all right. So we're breaking down the power law here, but the power law is not structure. So I'm taking liberty here, right? And the difference between, for example, power law and structure, and this is structure, right? And if this breaks down over here, then I would say what we just looked at on gold versus the dollar, what we just looked at on Microsoft, then I would be leaning towards a camp of some type of prolonged accumulation zone entering into the market. And we also know that this is just where I have placed this magic orange line, because it was the COVID lows, and then it was also the lows over here of FTX and the previous bear market. And structure goes down. You could see it over here. That's held for longer, and is something like that possible if we break down? Of course, everything's possible. It's the markets, but this is the line in the sand that I have drawn and what I use and am using. And it's different than the power law. This is power law, not versus the dollar, which I don't believe has broken down yet or anywhere close to it. But versus gold, it has, and it makes sense. It has, as gold in this moment is being repriced in real time with monetary reset occurring. And I don't know that that's going to stop or not, right? I think that, people could envision gold at, $16,000-$20,000, and certainly in a not too far distant future, $8,000. And it seems that the momentum that's in place here for gold is not about to go away. It could, but it doesn't seem it's going to. I wouldn't be surprised if bit of gold continues here to make some gains versus Bitcoin and or move into some type of prolonged accumulation before Bitcoin makes its rise out against gold again. That's my own view of probably what is going to happen. I Is Bitcoin considered a risk asset? Bitcoin's always been a risk on asset. Bitcoin right now is lagging the S&P 500 by a lot. I like to think that maybe what you're seeing there is the quantum compute factor. It could be. I don't know what it is, but I think that there is a lot of, let's say, well, you have people like yourself who are very tech oriented, and then you have other people who follow from afar. And then Ray Dalio is like, "Oh, Bitcoin's susceptible to quantum computing," and they're like, "Oh, well, I'm not going to invest in that right now." And I'm sure it plays a role, and I don't know to what degree. I think what plays more of a role is the liquidity, and we all know that what we've been seeing is been for sure liquidity has been going out through quantitative tightening, and we just were in a stressful point that caused the Fed to have to stop running QT. Like they were forced into it because reserves were no longer ample. And now they're pumping them up at like $47 billion a month at a clip through April, and then they're going to drop it down towards 40 billion a month. And we know that there's like that's slow, and it takes several weeks in order for liquidity to stabilize. And whether or not Bitcoin makes a lower low, we don't know. It did last cycle, but our expectations are that liquidity is making a turn here, and we're going to see monetary base just like over here. The last time they stopped running QT and started moving it up, we're going to see monetary base begin rising, and I believe that Bitcoin will along with it. Does that mean it's going to move towards outperforming gold? Likely not yet. Could there come a point in time where things are running hot, a reacceleration is the narrative, and liquidity is becoming more and more ample? Yeah, then Bitcoin should outperform gold and likely will outperform gold, but that still might look within some type of like gold is still gonna. I don't think the fundamentals are changing on gold, so you might see some of that like accumulation channel occurring in during even with if Bitcoin's making a move towards 130 and Bitcoin is able to have like a a 40% return in a month or 6 weeks is going to be outperforming gold in that moment. But gold, I don't think is going to like any of its current momentum is going to change anything. Like I don't think that people are going to lose sight of the growing debt and deficits and the risk in holding U.S. Treasuries. So I think gold is in a super cycle, and I don't think that anything has changed now that we're at 5,000 and revisiting that in the next years ahead, it's likely going to continue in that super cycle. The only thing that for me would change it if they're forced to an outright devaluation. The Fed's balance sheet is going from 7 trillion to whatever 12, 15, $20 trillion, whatever they're going to do. At that point, shortly thereafter, then gold would become out of favor for me. That's my view. Um, so let's move this on. I have to jump over here to show you this video over here. This is the bull run is almost here. Copper to gold just hit the exact same levels that marked every Bitcoin bottom since 2010. 2011, 15, 20. Every time it bottomed, Bitcoin started its bull run. Hey, look, this is 30-second video. Let me put it
Everyone
on.
is focused on silver and gold, but they're missing one key asset. What we're looking at here is Bitcoin versus the copper to gold ratio. Now, here's the thing. Historically, every time the copper to gold ratio has bottomed, well, then that has been a sign of the Bitcoin bull run starting. It happened here in 2020, in 2016, and in 2012. So all we really need here going into 2026 is for the copper to gold ratio to bottom. Now, here's the thing. We are at the exact same levels as...
Which is probably true, except that just because we're close to the level that it has bottomed previously does not mean that it's going to bottom imminently. And that's the same thing that we're looking at as we view, the business cycle. And, I don't know when that resumption is going to continue. And my belief is right towards the later half of this year that it will, and then we'll start moving into that running hot and growth phase. And if that's happening, likely this is going to also you'll see a shift in the gold to copper ratio, and that likely would signal a bottom again. I know we looked at just last week, this week, another chart from Simpson, and it was looking at gold bull markets leading to Bitcoin bull markets, and likely those things are going to line up again. It's just how it plays out is we don't know. I don't you could still have quite a bit of momentum here before we see any type of switch. We were just talking about copper, right? there's no shortage of gold, and it runs at about a 3% inflation. This is projecting by 2035 deficits we're facing in minerals, right? So it talks about cobalt, nickel, lithium, copper, all things used in EVs and storage, battery energy storage. And ask Rock, like, are those deficits today or projected by 2035? This is projected by 2035. We're not at those critical levels yet. I'm looking where it says for 2025 or anything like that. So are we going to continue to see copper prices, which are rising, right? If you move towards a place where you are seeing the economy beginning to reaccelerate and the global economy, then obviously not only through, you know, the continued build out of all this AI infrastructure, it needs copper, right? If you start seeing then not just the AI build out, but you start seeing, normal, like up until the advent of these data centers, the normal use I'm thinking in my head at the same time, like China was building all these ghost cities. They're no longer building those ghost cities, or do I imagine they're going to return to that? That was probably taking up a bunch of use of copper, but as the economy is running, usually copper is growing as well. We could see, or I could envision during that happening, a turn in the copper to gold ratio. It all lines up. Here's a look at global liquidity. It doesn't get cleaner. Global liquidity breakout. Okay, so I don't know how. I'm just reviewing these charts with you. I don't know. I normally just give my analysis. I want to go over these charts on this Friday. We got a bunch more to cover. We got about 7 more up over here. And interesting. That's a tough one. That's a tough one, Um Yeah, what a joy to see you in here. So I don't know how global liquidity is being measured over here, and it might be by M2. And you all know my view is that, Fed balance sheet turning up. We're about to see M1 turn up. That's high signal. You can see the breakout occurring over here. Look at the past breakout over here. So this is 2019. Notice M2 had turned up. It took a while for the Russell and Ethereum to bottom, but those things did bottom when M1, monetary base totals rather, started turning up, right? Which is this point of the cycle we're in now. So I guess this, in a roundabout way, is just, I guess, I prefer our view, but here's another view with M2 showing the breakout and the lag that it took, and M2 is lagging. So I don't know what else to say about that. This is Michael Oliver. I don't know who he is, but he's it's saying legendary technician, founder, momentum structural analyst who nailed the 1987 crash, I guess with Paul Tudor Jones. He's saying that silver is going to explode to 30 to 500. Who else has said that? Who else says they're not selling their silver anywhere below 300? And he's pointed to things about, let's say, here, let me play the video. I'm going to play the video with you. I want you to hear.
A handful of months or so, 5, 6, 7 months or so after that November breakout, therefore starting in December, a vertical move in silver that's likely to take your breath away. Not just to go up to 90 or 100, but go into a couple hundred, possibly 300 to 500.
He's calling that soon.
There's some rationale for that, by the way. Various angles of analysis give us that conclusion. And we think a lot of that's going to occur by the second quarter of this year. Obviously, that's not going to occur in isolation. Gold's also going up. And I think gold at 5,000, for example, which is headed for now probably, is way low. Plus, that's just to do what gold has already done twice in the last 50 years under far less dramatic fundamental conditions. Eightfold. Right now, we're only a little past fourfold. What if gold goes to 8,000 again? And silver goes up breaks out versus gold, which is done. It goes up to 3%, 6%. Those are numbers it was at in 2011 when gold had that bull market run up into 2011, which was the second hit up at 50. Silver spread then was 3.1% of the price of gold. Right now we're just 2. If you see a 10 to 15% drop and it looks like hell on a daily chart, buy it anyway. And if you go back over the last handful of months and every time you see a 15 or 8%, 10% drop, if you bought it.
First of all, he pointed to 2011, so let's look at that. And he's saying we've seen these ratios before, and if gold goes to 8,000, that could equate to 300 plus silver. Now, the time frame he's giving it is rather quickly within the next 6 months, next 2 quarters. I don't know when gold trades at 8,000, but I see a point in time where gold is trading at 8,000, and at that point he's likely correct about what he's saying about silver. But hold on one second, let's look back at that. We were just looking at this chart together, and we were looking at, right, we were pointing to when gold peaked over here in 2011. Hold on one second. I bet I have a chart I want to bring up with you. So I'm going to put up Ed Sakota here 1 second. Hold on 1 second. I want to see what was going on. All right, I don't have it there. Maybe I have it here. All right, I think this will work. Hold on 1 second. All right. And take it up. So check out this chart over here. So 2011, Operation Twist, right? And so we're talking about, and back when QE started, no one really knew what it was or what the ramifications were going to be, and there was a lot of hoopla. It was the first time it was being done. A lot of people thought it was going to be deflationary. It was uber asset inflationary, which is why in 2020 I told, like, you had like people like Dr. Lacey Hunt, and he's like, this is going to be super deflationary. And I was like, no, this is uber asset inflationary. We've seen this before. I know how to recognize patterns. And you can see over here, QE, massive expansion, QE2, and then Operation Twist. So in my mind, let's try put Operation Twist with like what we just saw in QE in March 2020, that massive expansion of the balance sheet. Because I'm imagining here at this particular point in time, you're going to see silver really run against gold. And let's just see. Nope, I completely wrong. Silver tracking gold almost perfectly in that particular moment. Let's move over to the last one just to see the difference. Where's the massive expansion? This is much different. I was wrong. This is all right. Hold on 1 second. Maybe it's similar. Let me take a look at the move that silver puts on right after QE compared to gold. They both went up for a few months, for a couple of months. But silver's move was a rocket, which is why the gold to silver ratio really went that crazy. You can see the same thing happening over here in QE2. That's where it happens in QE2. You can see the massive move silver puts in versus gold. And just so you have an idea of what that means, let's go back over here. Save silver on there, it belongs there. Let me just go over here really quick and put up the gold to silver ratio. And you look in 2011, right over there. So look at, this is QE. We just looked at QE2, and look how silver just outperforms like a rocket, which is similar to right over here, right after QE, where it outperforms like a rocket. So that's good to like, it's going to happen eventually, I think, where they're going to return to massive balance sheet expansion. And when they do, like, it's shortly thereafter where we see gold and silver peak, but silver should be a rocket. If I'm selling silver at any point, I'm not selling before that window. That is the window that I would be selling into. And I would expect that heading into that window, that there could be some violent corrections on. I don't know how much. I expect it could be high, a lot higher than it is today, but there will be violent corrections. I'll take the Fed chair. No, I can't do that. I don't. No way. I think Besant should be the Fed chair. Here's another like every macro bull market starts the same way. Gold runs first, then Bitcoin, and then else outperform everything. I think we see that, and I do think we see an alt season. I don't think that we see alt seasons like we saw in 2017 or even parts of 2021. I think select alts will outperform, but there's always going to be at a point in time when PMIs are running hot, when the economy is running hot, where there's rampant speculation taking place, and it'll be all over the place. And of course, people will look at low cap altcoins and the speculation will be taking place. I don't. It doesn't have any part of the framework that I work within. Gold, silver, oil. Look at this. What do you think's going on here? There is a massive disconnect between what's happening here with the metals and what's happening with oil. Is it time to begin looking at oil? I mean, I'm still kind of a little bit of shell shock in me from when oil went negative on the futures contract. But here's what he's pointing out over here. And here's the moment, though, that we traded negative. This was recession, oil just getting wrecked in it. Listen, I think that you could see the high over here in 2008 when oil was at 150. You got nice structure coming down off of that. You have, I can make this line over here. It goes off the top here, and then where we wicked below, and then wicked below again, and then the resistance right there. So that's a good line. I'm going to keep it there. I like it. But I think that I need to take a look. Let's do it like this. What was happening here? Nothing really. On a different time frame, maybe. Let me just peek at the weekly just really quick with y'all. I want to see if there's any type of... it's not the clearest. Yeah. So is oil going to 250 over the next few years? Abundant oil, is it? I mean, I don't know. I thought if we get a breakout over here, then I think it's worth us paying attention to and looking to position in. And then we know where we'll be wrong and where that fails. I do see a descending wedge, which is a super bullish pattern occurring on top of previous resistance, now forming as support. So a breakout, I think then that's something that we would like to be early on and interested in. And if this breaks down, I don't know if that's the clearest either, because it's noisy here. You can see where it was support, right? Another resistance, support. It's messy in there. And a breakdown, if oil breaks down below here, though, then it could be, and I imagine if this is happening, we're into some type of recession, liquidity crisis. But I mean, from where we are right now, the chance of it breaking out and the chance of it trading down into the mid-20s is not, they both could happen. So that's why we follow lines to manage risk around. But that's something for us to keep an eye on for sure. There are no probability. I know he's doing such a good job as Treasury Secretary. By the way, if you haven't seen in community chat, Brownie Brown's work here on Bitcoin individually, V4, Ethereum, Cardano, Solana, and MicroStrategy, and then them together, a MicroStrategy offers and adds so much to the Kager over here. It's ridiculous. Without it, you could see, for example, the Kager on Bitcoin, 138. Ethereum 143, obviously higher when you get to the alts. And then here's MicroStrategy. I would like to see, though, what the Kagers are just since the bull market breakout, since 2023, when we've had that massively reduced volatility. And the Kagers you're going to find out are quite high, right? This is Bitcoin and Ethereum together. That's what I'm interested in. And those are big. A lot bigger than Bitcoins, but we'll take a look at that in 1 second. Let me continue here. So yeah, is it possible that, I mean, these charts going back to back 125 years, there seems to be some type of symmetry between the price of gold, silver, and oil, and you could see at many different times there was deviations, and there's a big one right now. So let's watch that oil chart together and see if we get that breakout ahead. I think this is something to watch. 18-year base breakout on emerging markets. I think that's very real. There's a high dividend yield ETF I've been checking out from afar, not from afar, closer and closer. GIAX, and part of the allocation is to emerging markets. So I'm thinking that might play a role. Interesting here. I don't when the CapEx spending and the AI build out stops, I think that at that point you see US markets go into a period. People like to call it a lost, I don't want to say decade. It could be a lost 3 years. It could be a lost 5 years. Bear market, and I have no idea what that looks like. But during that point, emerging markets should outperform. This is the gold to silver. This is a target that I've given. I like the cleanness of this chart over here and pointing down towards a lot lower than a lot of people expect. I know a lot of people rotating out of silver into gold right now. And although I expect in a time of crisis, that obviously for that short time, gold definitely wrecks house against silver. Why? Because gold could have a 15% correction. Silver's going to have a 30% correction. So the gold to silver ratio is going to greatly favor gold at that particular point. But yeah, this is the only time that I would rotate out of silver, and I wouldn't do it into gold. And I mean, assuming that the world is matching what we project now, but at that point, Bitcoin, a rotation would make a lot of sense. This is, hey, I like this chart only because it gives me projections kind of where I've aligned myself. First of all, I love the structure. This is structure, right? Let's go off of these two touches. That's structure. And I imagine if I could clone this line and bring it up, it's going to be structure throughout, right? Look at that. That's those two touches and the one there. And then is that structure? It's going to be close. I imagine this is structure. And then you have a one-touch line. I don't know who this is, but I love the TA. It just aligns with CTM TA. And he has an ultimate potential, resistance up there, right? So that would be if it just spiked up now. Who knows what it will be, down the line. And I like it. This is, you've seen this before. This is the big shout out to Flavy. This is the Livermore accumulation cylinder. And a lot of people are hoping this is what's happening with Bitcoin right now. This is a bit of a hopium shot, and it could be. But he's saying, and I like that the next 120 days are really important. And I hope it's because, right, you could break down like from it could also break down from the cylinder, and then this pattern is invalidated. But it's a bit of hopium. You can hear from my tone that. Look at this, though. This looks quite bullish to me. This is looking at Ethereum, and I'm quite bullish at Ethereum. This point of cycle. Ace, we've been waiting for this for since I can remember. For the Fed to return to balance sheet expansion and time for Ethereum to get going. And this chart looks awesome. Comparing gold's 2011 to 2000, the most recent 2023 breakout, and matches up to me. That's a fractal I like a lot, including the spring over here. The only thing I could say is that that this is playing out over a 5-year period. This is playing out over a 15-year period. So the breakout, if this does break out and you see, you know, an acceleration, Ethereum trading above $8, $10, $12,000, it's going to happen in a much shorter time frame. So that, I believe that. I like that chart. This is looking at Bitcoin. Hold on one second, y'all. This is looking at Bitcoin, and they're giving, I don't know what to think about this. So I'm going to tell you right now what I think about it. They're saying the most important model in Bitcoin expects a 2025 price at 90K, which is where it closed. Here's 2025, 90,000, right? And it's showing an annual growth rate that is just diminishing softly. And then you look at like the last couple of years, oh, well, last year it was at 50. So that was perfect, right? And then you look at the year before and it was 58. That's perfect also. But then you look at 4 and 5 years ago and it's at 25 and 23%. I don't know. I guess I'm getting confused here because I'm looking at what would be the this is a kager. I know we had a bear market in there. Bitcoin was off a lot, so I just got, I guess I get confused, but because we're looking at the compounded annual growth rate. So I guess we have to, okay, well, bear with me then. If you were looking at this from, and you're going back and you imagine that it should be 52 and a half here and then 55, and then in 2022, 57 and a half, but Bitcoin was trading off of, well, this is the annual growth rate. So that's not the compounded annual growth rate. But in 2022, we had a massive, massive bear market in Bitcoin. It was off substantially. So I don't know. I just don't get it. Maybe they mean compounded annual growth rate. And if it's a compounded annual growth rate, well, then what happened over here? 4 and 5. I don't know. Maybe y'all know. And this is back to the Simpson. But let me show you the chart I like that we looked at last week together, or this week with Simpson. And it's not the breakdown, and we've covered the breakdown pretty well. There's a lot of coverage of the breakdown over here, but this one over here, that's the Bitcoin. Well, this is good enough. This is we were looking at the copper to gold ratio, and you could see the copper to gold ratio signaling over here. Oh, I'm looking over here. So it looks like copper to gold bottoming first, and then you see afterwards copper to gold bull market, and then that leads into the Bitcoin bull market. There's one more chart I just want to end with over here, and that was looking at, which is, by the way, when people, that's dollar cost average, that's fine. When people look at those like retiring on Bitcoin, I mean, I don't know how they work in so much as that if you look at the returns in bear markets, or even just last year, like Bitcoin was it was a down year. It was projected to be by those models in an up year, and if you're pulling, I don't know how that works. That is, there we go. This is what I want. This is what the point I'm making over here. This is why this is the most. These are obviously, and I don't know what I'm looking at. I'm still looking at Bitcoin. Hold on one second. Let me look at just Bitcoin. This is Bitcoin on V4, and you're looking at kagers of 138. I mean, even last year, Bitcoin down year, volatility flat as can be. And I mean, this is something that people could use looking for some stability to being able to withdraw from as they look towards retirement. I just don't see how it works the other way in the way they're calculated. This is bull runs on gold, which were in a mega bull run. And then you could see them leading towards eventually, here's the bull run in gold. Here's where it peaks, right? This is amazing. This is where it peaked right after the Fed returned to QE. That's something to think about. Let me just tell you that right here. This is something to think about. I'll come back to it in 1 second. Here's the previous one we looked at over here that we were looking at gold's bull run ending right over here as QE2 started Operation Twist. Shortly thereafter, Bitcoin bull started here and then over here. And also Bitcoin's up move. I don't think that's a bull market leading to the bull market in Bitcoin. But here's the thing is that these catalysts are occurring around Fed policy. So potentially the Bitcoin super cycle that we're currently in continues up until the next Fed devaluation. Imagine, we see CapEx spending down. We got to there's a problem. Fed has to government has to come in and backstop these companies. We must win. China, 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 and then you could see I could see a massive burst of printing. I think there'll be pain before there's printing, but we could all see a point in the future, and I don't think it'll be soon. A lot of people think that we just move towards balance sheet expansion. I don't think it's going to be 6 months before the next big print. I think it'll be sometime after. Imagine gold's bull market continues all the way through and until the next devaluation. That would suggest that Bitcoin's bull market, the bull of all bulls, runs when monetary policy aligns, does not happen until then. That's a possibility that could happen. Now, I would think, and I do think, that balance sheet expansion has begun. I could think, and I do think that 2026, yeah, I could see Bitcoin trading at 130,000. I would, if all goes well, I could see in 2027 Bitcoin trading at 190, right? And this is all before the bull run begins. Bull run begins when monetary policy aligns. That's a different nut than you hear 4-year cycle, 5-year cycle, blah, 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 blah. And it's always been for me monetary policy set by the Fed. This, just looking at this chart here, it says to me that, you know what? Doesn't mean Bitcoin trades in a down or in a bear market. And I think that there will be, I just spoke about rises, 130 in 2026. Sure. 190 in 2020. But the bull market, I don't think that, I think that's held off until Fed returns to outright QE. Wow. Let you take that in for the weekend. All right, y'all. Thanks for being here on this fun Friday. Thanks for going over these charts with me and taking a look at them. We're ending in here. Silver still above. The silver, 101 US dollars an ounce. Everyone, God bless you. Have a great, great weekend. Brian, Don, by Monday, I'm going to have out the buy side only once a day renditions here, and well in time of, I hope, of any type of signal. And yeah, I'll get it out ahead of time. If we're getting close, I'll be checking in over there and make sure I get it out to you ahead of the signal. But it's for review purposes. I know Don's already trading it. Don had architected it. Everyone, have a beautiful day. God bless you. I'll see you all on the inside.